All right, we're back with another awesome episode today. I have a very special guest, Tillman Holloway. He is the CEO of Arch Public, and recent good friend, I could say, for a lot of the stuff that we were working on. So we thought it would be a good idea to have him on the show. Tillman, appreciate you for coming on, brother.
Absolutely, I love it. Man after my own heart. After we started talking, it was apparent that we had a lot to talk about. So excited to share that with everybody else.
Absolutely. So I'd mentioned to you before we got on here, I saw you on with Scott, the Wolf of All Streets. How'd you get into doing stuff with him?
I've been in the Bitcoin space for a long time. I'm not a very public facing person per se. I've got 4 kids and, just a dad but love crypto in every way and got into Bitcoin in late 2012, early 2013 as a miner and fell in love with the technology, and one thing led to another, and it consumed all my career paths led to crypto. And so
Understand.
I've started several companies, and really I'm passionate about democratizing access, and I think crypto is such a shining example in democratizing access and giving people something that is built for them by them, and they don't have to worry about essentially the central man or the centralized force taking it over at any point in time. So all those things made me fall in love with the tech, and Scott is such a integral part of being a voice for the market. And I think through Twitter, now X, I think, I was a fan of his, just like I was a fan of yours, and a big XRP believer in terms of the technology itself. And I just one thing led to another, meeting people. You know how it is in the
Yeah.
space. It's a pretty small community. So love doing it. And I was resistant to it at the beginning, but honestly, we do it every Tuesday now. And it's one of my favorite parts of the week. We have another show called Beards and Bitcoin with Chris Inks. He's a technical chartist on Wednesdays as well. So it's fun. It's kind of what I look forward to every week now.
I gotta get my beard game up if I'm down
Yeah.
to be on the podcast.
You got a lot better one than most people do. Yeah, you already qualify. Come on anytime.
Okay. All right. Well, the stubble, I guess, qualifies. Yeah, one day I'll graduate on up. Um, well, it's cool to hear your background and like, there's just a lot of really good people in the space. And to your point, at I won't say the top, but like, if you run in the same circles, you get to meet the same people, you're at the same conferences, you just tend to develop relationships, which is, part of the fun. Outside of making the money in crypto, you get a lot of fun with meeting good people.
Yeah, and I think the last couple of years in particular have been, I think COVID and everybody being, stuck in their house for essentially 2 years, I think it really put a dent in terms of the momentum of the community that we have, and it's back. I mean, if you were at Bitcoin conference this year, XRP conference, which you were, there's a lot going on in the market, almost too much. You can't keep track of it all. And I think everybody is so passionate now and able to get together that a lot of development and a lot of unveiling of past development and partnerships and collaborations, all that is a byproduct of people being in the same room and being able to break bread and discuss mutual interests and all the above. So it's a very, very exciting time to see all the collaborations in particular going on in the space.
What do you think is the no, I'm gonna put you on the spot here. 2026. Uh Give me three things. Tillman's predictions for 2026.
I think we will have the first ICO from a non-crypto company happen. I think ICOs are back. I think Coinbase is the right company to bring them back. I think the way they did this last one was a milestone for humanity. We've never had. You talk about democratization of access. We've never had access to IPOs before. I don't know about you, but did you get invited to participate in the Tesla IPO or in Amazon's IPO or Facebook's IPO? Like those are invite only clubs, and typically they have very, very high minimums.
Yes.
Um, and so when you look at what Coinbase did with Monad, if that's how you pronounce it. It was very, very unique. What do I mean by that? Well, they allowed, I don't care how much money you had on their platform, the most anyone got, it was about 57,000 or 59,000, I can't remember, of allocation, $59,000 worth. So, that brought the average person to a much tighter spread as it pertains to what the lowest shareholder was versus the highest shareholder. It leveled that playing field for everyone. And that is something that's so powerful and has never been done before. I think you're going to see a continuation of that. I think the cat's out of the bag. I think it only took one time for us to see that take place. And if you look at Coinbase as now kind of the new Goldman or the new JP Morgan, and they're the issuer, they're the creditor, you can lend, borrow, yield farm, everything. They have a banking license. I mean, the landscape for public trading is going to materially change, including IPOs. I think they're all going to be ICOs going forward. So that would be my first big prediction. My second big prediction would be that DeFi is going to grow in total value locked at unprecedented rates.
I concur with that one.
Because I know your customer base or your viewers are huge XRP guys. Let's just take XRP, for example, and what's going on Flare, right? Flare, I don't have this as, I'm not involved in the deal. I don't have any knowledge outside of what I've heard publicly. But I have heard a lot publicly that, like, Flare's tech is being integrated at a native level, at a exchange level. So what does that mean? It means, like, companies like Uphold, I think, announced that they were integrating. Well, Uphold serves a very specific community. It's the XRP community. They got known for what they were able to withstand during that whole debacle. And they have a very loyal customer base and a lot of XRP on deposit. So if they own a lot of XRP. Forget the customers; they own a ton of XRP. So you look at them and you go, okay, well, them integrating Flare, what does that mean? Well, it means that if you have money on Uphold, it means that you are going to participate in DeFi without even knowing it. It's no different than what we see at Coinbase right now. You can press lend or borrow, and you're participating in DeFi without even realizing it, and without the complexity and the complications and all of that stuff that typically went along with DeFi and involvement. And so I think that in native integration is going to be fabulous. Why do I think it's going to be fabulous? Because nothing promotes competitive user-based participation more than DeFi. If you're talking about like profit sharing as the financial institution and you are the largest depositor, like you go deposit a bunch of money in your bank, they still don't cut you in on the lending rates that they have. This DeFi does. And so you have incentive to keep your money on chain. You have incentive to keep your money at, Uphold, for example. Unlike any time else. Most of the time in the past, exchanges were used for like access to specific ICOs, like Coinbase would say, we're issuing this ICO, blah, blah, blah. So that's how they got it, or just for transactions, on ramp, off ramp. But there's not been a real compelling reason to hold it, because you're holding crypto, you might as well hold it yourself. Now they're inventing some incredibly compelling reasons to hold it, like making 8% riskless yield, or not riskless, but as riskless as you can get for 8%. You know what I mean? So I think that's going to be another huge thing that's going to take place. And then, I'll do one specific to the community that you serve most, XRP.
Okay.
I think that Ripple is going to be a juggernaut. And I think that they have every piece of the pie needed to be the most liquid, instant settled, 24/7 exchange that exists. If you just add the stable coin that they created, coupled with the amount of liquidity that they have in their XRP holdings, coupled with Hidden Road, coupled with the banking license, I mean, those four things make them a a Coinbase, but for a very different audience. Like Coinbase is going after retail. That's like, they got 130 million. You're not going to catch them, I don't think, in the near term. Hidden Road serves a very different purpose. It's going after treasury companies. It's going after corporations. It's going after endowment money. It's going after the biggest, and I think the technical term is a direct broker. There's only a couple of them. Falcon X is one, Hidden Road is one. And so you look at why do you need a direct broker versus like one layer up would be a custody broker, like a BitGo, huge custody broker, Coinbase, huge custody broker. Well, the order makers, all the biggest liquidity flows happen down at that market maker, direct market maker level. And Hidden Road is that. And so them being at the base level puts them in a very unique position to serve as as a settlement layer, if you will, for markets, especially when you're talking about real world assets being put online. And I let's call the real world assets what they are: tokenized stocks.
Yeah.
That's all we have the tech for right now. Like, we're not putting your mortgage online anytime soon. I hate to break the news to everybody. Uh, but what they can't, why can't we? We can't because paper settles houses. At the county courthouse in every county, you go down and you file all the paperwork and they tell everybody who owns what. Unless they decide that they're going to go on chain, you can't retrofit that, right? Whereas, like, no one settles in stock certificates anymore. When I buy a stock, I'm not getting the certificate. So that paper is out of the equation. So now I can just tokenize the stocks. And if I'm the issuing broker, there is no paper swaps. There's no complication. And now I have all the access. Well, you've seen CME is now doing direct feed for Solana and a few others. You've got NASDAQ announcing that they're going to go 24/7 trading here, I think December the 26th or whatever it is. I don't know what date it is. Don't quote me on that. But in the very short future. So all of those characteristics that we've been, saying Bitcoin and blockchain and XR, like all of this blockchain technology is going to push everybody. It's here. I mean, the market makers are having to move massive amounts of tech and infrastructure around to accommodate the customers now. And so I think Ripple stands to profit a great deal in that scenario.
Well, it's a good thing, we have a little equity over there. Um,
I think it probably is a good thing.
Yeah. So no, those are great predictions. And so, I agree with you. I think 2026 is going to be like the Cambrian explosion, the integration of DeFi and TradFi. To your point, a lot of collateral locked, LTV
Yeah.
on chain.
Yeah.
And with XRP being effectively a commodity now that it's being traded on Binomial, the institutions can use it in that regard.
That's right.
I had a short conversation a little bit before we got on here with somebody I'll leave nameless, but I talked to them about Solana, wrapping your XRP on Solana, and they said, well, their tax attorneys said that that's a taxable event, and I was like, that doesn't make any sense though. It's the same representation of value, like it's like taking cash out of one bank and putting it in another, or transferring your title of your house from one person to another. It's still a direct representation of that value.
Well, I think, and I don't know enough about that project specifically to be able to speak intelligently about it, but I know enough about this argument to speak intelligently about it. And one of the things Hugo Filian has talked about is that, uh, you know,
You would have the same problem with FXRP, right? Like it's a wrapped version of XRP on Flare.
no, it's very different. And
Okay.
here's the reason why it's different. It never leaves mainnet. It never leaves the main chain. So the way that the FXRP system works is this. You have the Flare mainnet. Flare is a layer one protocol.
Right.
Any of the other wrapped are layer two protocols and or they are a conversion bridge between two layer ones, which means like, for example, I can own WBTC, but I don't own BTC.
Right.
It's not BTC. What is it? It's ETH. That's what it is. It is ETH. It's
Yeah.
just denominated against the price of Bitcoin. That's really what it amounts to. That's the product. So when I want to take my BTC and I want to get ETH or WBTC because I want to earn yield on it, that's a taxable event because I'm taking get Bitcoin and I'm removing my ownership from the mainnet and I'm putting my ownership now in a new mainnet, and that is a transfer. That's a sell.
Okay.
The difference between Flare, the way that, and by the way, this is limited understanding. I'm not a tech expert, but I do, I'm a thirsty person for
Yeah.
numbers. So I do a lot of research. But the way that the FXRP network works and is like this. The Flare network is a layer one network. So it doesn't work underneath XRP. Okay. What it does is it works off an Oracle protocol, and the Oracle protocols are looking at the XRP mainnet. And if you are dealing with the Flare and you own anything on the mainnet over here, you can pledge these assets or lock them to create a new asset that is over collateralized. It's collateralized with this mainnet asset, XRP, and it's also collateralized with Flare.
So it's
And
a loan.
well, it's a birth of a new asset that has collateral. It'd be no different than if I if you came to my place of business and you said, "Hey, I need a loan on my car," right? I'd issue you a piece of paper. We'd collateralize your car, and I'd hand you cash for it.
Right.
Same thing here is you're getting, instead of having XRP now to have to switch to another network to mine or to participate in DeFi, you can just not move it and you can create a new asset called FXRP. And because that new asset is FXRP is really this, it's just a
Right.
representation of this, there is no taxable event. That's the way I understand it. But there's a lot of security advantages as well in the fact that
Yeah.
if this asset
There's-
moves, this asset's destroyed, right? And the oracles are the ones that answer to that. So there's essentially real live pricing data that's coming in through the Oracle feeds, and the oracles have a vested interest in keeping that pricing data accurate. If they lose accuracy, then they lose money, and they don't want to lose money. So their incentive is to report accurate pricing. That's how the FXRP, and that's why it's a very, very different thing than wrapping one of your, other assets to participate in DeFi. And
So when you're wrapping, you're moving the asset off of one network onto another and exchanging it for a representation of value. If you lock the asset on the main net and you get a reflection of value or a mirrored value, then there's no tax implication.
there's no tax event because you never move it. It never move.
Right.
There's never, that wallet sits there with the same XRP in it.
Okay. Yes, it's like a no interest loan. Is kind of how you could think about it. I mean, it's a
It's
representation of value. You're able to pull the equity out of it and do something else with it, but it's locked over here as collateral.
it's more like sometimes you need a diesel truck to pull stuff. Sometimes you don't want to drive a diesel truck. And instead of owning both, you've got a guy that owns a diesel truck and you've got the sports car, and you got to deal with him. Whereas as long as the sports car's parked in his garage, the diesel can be out of his garage. And as long as the diesel's in his garage, the sports car can be out of his garage. And as long as those two rules never get broken, there's never a problem, right? And so he comes to his garage. If the sports car's in there, he knows you're out using the diesel. And if he comes in there and the diesel's in there, he knows you've got the sports car, and y'all have equal collateral, and you're using those things for different purposes at different times. And there's a reason to have that. If you're if XRP treasury company, do you almost are forced to do this. And I'm going to explain why. You own a ton of XRP.
Yeah.
You're going to just leave all that yield and money on the table and not participate in DeFi. And your whole purpose is to make your investors money on your assets. Well, that's fiduciary. That's your responsibility to do that, right? So, but then at the same time, you're going to, at the same time, tell your shareholders that, yeah, we want to own XRP, but we're not going to actually own XRP. We're going to own a wrapped version of XRP on a chain that allows us to participate in DeFi. Well, you're not an XRP treasury company then. So you're damned if you do and damned if you don't. The only answer is that you need a protocol that allows you to participate in DeFi, but also doesn't force you to sell your XRP.
Right.
It's the bottom line.
Tax implication.
Yeah. Well, not only no tax implications, purity of ownership. Like, you can't call yourself an XRP treasury company if you don't own XRP.
Yeah, if it's something else, then it's not.
If it's some, wrapped,
derivative.
Frankenstein of XRP, it's not really XRP. It's not on the ledger. It doesn't count.
Really good point.
Because I know you believe in a parabolic spike at some point, don't you?
Oh yeah. Oh yeah.
Well, let me ask you a question.
Okay.
You own a wrapped version of XRP, a non-F asset.
It's not the direct representation.
That's
of
not
value.
Flare version of it,
Yeah.
but this other
Not good.
type where it's, well, what happens in that parabolic rise in price of XRP? You think that exchange is going to redeem your XRP? Heck no, they're going to go bust. They're going to tell you pound sand. That's the nature of owning something that's not the asset. Is you have third party counterparty risk. You've got redemption value if they redeem.
If they redeem. That's the counterparty risk. So I don't want to drag anybody in, but what about MXRP? Are you familiar with what Axelar is doing?
Yeah.
Do you think there's a possibility of that situation playing out there, or is it similar to Flare?
It's not similar to my knowledge is that there's nothing similar to Flare. There's two Oracle protocols that have made it to a place of critical mass, Chainlink,
Yep,
and Flare.
Yeah.
Yeah. So those are the two Oracle protocols that have made it. All of the other ones are some wrapped, some Frankenstein version. And so you own the Frankenstein. But what happens if the authentic goes parabolic in price? Well, it creates the exact same event that happens when prices cascade down, right? With huge leverage. No one redeems. Everybody just goes belly up and they go, oh, sorry, we can't redeem because it's the same thing that would happen if these exchanges that do 500x leverage. They have caps on the price. You're not buying 500x leverage with an unlimited ceiling. You're buying 500x leverage to a price. Well, if the reason why they do that is that they're the counterparty risk on those trades. They have to cap it, or they go bust if they are wrong, and you can't have a business go bust all the time without any consequence. So that's the same type of thing here. Is you're going to have an event that takes place if XRP goes parabolic in price, whereby which any Frankenstein version of XRP is it goes belly up and has a major disjointed price.
So we do the same thing. We hold the asset in institutional custody and reflect it with the counterparty off exchange to be able to mitigate counterparty risk. And then we get a line of margin against it, so we're margining the reflected value, not thick here. And then we trade that in a market neutral strategy to be able to generate returns. And we don't ever trade more than 40 or 50% of that in order to be able to mitigate volatility risk in case there's a collapse or an expansion in the
Well,
price
you're
of
a
crypto.
professional shop, and so DeFi is going to roll all that sophistication up for the retail person and click, lend, borrow, mule. Yeah. So it's just getting simpler and it's allowing everybody to participate instead of just people who have.
Democratizing access, which is
Yeah.
fantastic. Because right now, like to your point, we have minimums. You got to have at least 100 grand worth of XRP to come park it with us and use our services at scale. Like we want to work with everybody, anybody that has any amount of XRP. You just have regulations and compliance and red tape. And as we see all this stuff merge here in 2026, I think that the barrier for entry is going to come way down.
It is big time. Yeah. But I also think that the expertise that you guys carry and that we carry is very unique, right? And so we're in a position where the tools and the volatility that we've been accustomed to, if you've been in this space for as long as we have, and we've heard all the pundits say, volatility is an asset, it's not a bad thing. Well, tell that to everybody. No one understands that. They're like,
Yeah.
what do you mean? Well, it doesn't feel good when I was 90% allocated and I was down 90%. Yeah. But I just don't think that the institutional tools and the professional management has come to the crypto space in the way that it is in TradFi. And I think that is what we're seeing right now is the merger of those two markets. And we're on the cutting edge of it. I've talked to you enough about what y'all are doing and what we're doing with y'all to know that these are conversations that are they're happening at a breakneck pace. I will say
Yeah.
that. Yeah.
Yeah. So, we didn't get into your background or anything in the beginning of this, but for those that may not know who you are, would you mind just explaining, what you
Sure.
guys do over there at Arch Public?
Yeah, sure. I got into crypto very early. I love crypto. It changed my life. I'm hoping that it changes everybody's life. I think it is a shining example of what fair and equitable distribution looks like, fair and equitable ownership or management. I think that the trustless nature of it and the way in which it connects people globally instead of based upon what fiat that you are forced to being used. I think all of those things were the reasons why I got in. I think the reasons why I stayed in was because there was so much work to do. It was so hard to do anything, and there was so much innovation happening so quickly that it was inspiring, but also at the same time extremely frustrating. And so I just am one of those people that I like solving problems and I like bringing deals together. I'm a deal guy, and so there's just a whole set of tools and software that the TradFi markets have been using for decades. Like you go to any markets like the New York Stock Exchange, no one's shouting and throwing paper at each other anymore. It's all done electronically, and like 80% of it's done through automatic algorithmic trading, right? So you say, okay, well, that's going on this side of the world. And then you look at the crypto space and people literally, when I started the company 5 years ago, people thought all automation was fake and a scam. So you have these two worlds. Like if you go to dinner with these folks, they're talking about high frequency trading like it's mainstay. You go to these folks and they're talking about only they call high frequency trading bots, and they are referring to offshore FX trading. Like that was literally the two universes. And so the name Arch Public is a bridge to the public.
Okay.
And
Love
it
it.
was like,
Okay.
hey, we're trying to combine these two knowledge bases into something that's better. And so we set out to build automated tools, a suite of treasury tools, if you will, to help anyone from a free user of our software, which anyone can download our software for absolutely free on our website, archpublic.com. You can use up to $10,000 of purchasing power through that free suite every year. So you never have to pay us a nickel and you can use the tools in its full robust state. if you're a high net worth individual, or you're a professional trader, or you're a hedge fund or a treasury company, and you want a higher threshold and you want to use this as kind of a backbone, that's where we really focus and strategize with our customers. And we've got a whole concierge team that will build literally purchasing schedules and profiles with you. And so what that does is it allows you to build a systematic approach to the accumulation of your asset. And then it also allows you to set thresholds for yield farming, so that when you're in a market that's trending sideways, you still are making money on your stack. Like, those things haven't been given to crypto in a on a silver platter. And that's what Arch Public set out to do, was to make, bridge that gap in knowledge and give these tools to the crypto space. And so now that crypto treasury companies are kind of the, hot topic, and now that everybody's talking about saving money in crypto and putting it on your balance sheet, kind of right place, right time. Our tools have become very relevant in that conversation. So that's who we are and what we do. I will tell you one more thing about our company. If you're a free user, or you're the richest, most powerful customer we have, you're going to get exceptional customer service from us, because we are passionate about sharing our knowledge about these markets and our tools with people, because there's an aha moment that happens that makes it worthwhile for us. It's not just about the company anymore. It's about helping people and giving them access to things that at 2:30 in the morning, when the crypto market drops by 5%, and you have your automated tool set for that parameter, well, that instance triggers and you buy on that dip. When that happens, there's this aha moment that everybody has, that they're like, wow, I've got now a professional suite of tools that I'm never going to miss the opportunity. And it takes all that fear of missing out of the equation. It takes the emotion out, and it lets you create disciplined, managed approaches to your accumulation of these assets. And so that's, I think, what sparked our friendship, and the potential between us is that you guys have are on the bleeding edge of being a treasury company. To be honest with you, I mean, you're kind of in a much more prudent way a treasury company, and that's what attracted us to kind of your mantra. And your mo is um is making sure that safety and ownership is kind of forefront. Right.
Yeah. We want people to have access to institutional tools, just like
Yeah.
you, right?
Yeah.
People that are high net worth individuals, or people that just have a significant allocation to crypto, whatever that means for them. The same assurances that you get from a stock account at Schwab, you would get from, institutional wealth manager.
Yep.
And in that suite of tools, we want to work with people like you, putting together cool products and be able to bring those to market. We just announced, our deal the other day.
Yep.
Um, Inside of an IRA product, you'll be able to use a, bespoke strategy that we built with you guys to trade XRP and continue to compound your XRP and also aggregate cash,
Yep.
which is fantastic.
Well,
So
it's first of its kind, honestly.
yeah,
There's nothing else in the market that allows you to do that. And so if you're talking about a tax advantaged way, which is already is, a compounding effect, right? A force multiplier. And then you talk about what the potential rise in XRP possesses, and the utility therein, and all the things we talked about earlier. You're talking about, even if it's a small portion of your retirement allocation, you're talking about an asymmetric opportunity, right? And so when you have a tax advantage way to trade within that sandbox, I mean, it kind of becomes too powerful to ignore in terms of the force multiplier and the compounding effect. And I think that we're on the bleeding edge of showing a lot of people that, and it's going to be a lot of fun
yeah,
to see their reaction to it. Yeah.
yeah, I'm pumped for it. I think people are going to be able to aggregate, you know, a lot more XRP inside their retirement account, tax deferred or tax free,
Yeah.
using this tool and the algorithm that we've put together with you guys. So thanks again for, working with us on that. I know you got a lot of irons in the fire, and
Well, we do, but I'm going to tell you that your people, we always come back to the people. And a lot of our employees, and they're fabulous. And we know a lot of y'all's. And that's what kept bringing us back to the table. Max, I'll give you a shout out. He's as good as they get. And so when you have phenomenal people in your organization and you have a lot of passionate customers, it's not hard to want to work together, is I guess the point. I think that's what kept pushing us back to this. We're both incredibly busy. We're on the forefront of a lot of innovation and a lot of exciting stuff. I think, correct me if I'm wrong, but y'all one of the fastest growing IRA retirement management companies in the country.
Yeah.
So
Well, so like the RIA itself, so registered investment advisor, um, there's been some other family offices that have been able to aggregate capital fairly quickly, which I would consider us a family office, but we're the only RIA or registered investment advisor that'll advise you on your crypto. We've gone 0 to a billion in 1 year.
oh
Um,
my gosh. Oh, wow. Yeah. So it speaks for itself. If you do things the right way, then people continue to reward you with their business. And so, yeah, fabulous to create the strategies with you guys. And we're excited to see you guys deploy it at a management level. Up until this point, we've been working with a lot of companies that have, like, for example, self-directed IRAs. But this is the first XRP registered investment advisor, relationship that we have. So if you're looking at, you're an XRP lover and you want someone to manage the user-driven automation that we've created, which is a huge benefit. Again, this is the only place to find that.
yeah. And yeah, I'm excited about it. I think, well, because some people, like you talked about, there's complexity. There's always going to be people that want to participate in DeFi on their own. Right? They understand the nuances, they can wrap it, they can move it, they understand how to move from one place to another and use the different applications to do whatever they need to yield farm or whatever else they're doing. But for majority of people, I think they're like, there's an asymmetric bet here, but I don't necessarily want to manage all of that piece. I would rather have a professional deal with all of that and just know that, pay them a little bit of money, make sure it's worth both of our time, and we both make a bunch of money together. And that's
There's
where
economies of scale. There's all sorts of benefits
well,
across the board. Yeah,
that's another thing that I don't know. I think is gonna become much more relevant for us over time. So everybody has their own siloed institutional account, right? You get all those benefits, but you're effectively pooling your XRP without having to pool your XRP
yep,
because you're under the umbrella of what we've created. And so when we go have a conversation with somebody like you guys, we can say we're gonna allocate, you know, 100 million XRP or 200 million XRP, whereas the individual is like, they might have a million XRP, which is great, but it just doesn't have the same gravity that you would if you were part of a larger cohort of people.
absolutely. Yeah, I couldn't agree more. And it also, truthfully, doesn't give you the same ease of exit, which is a good thing. Trust me when I tell you, when your fingers are capable of, in 5 minutes going and messing up a lot of your portfolio, the emotional swings of this market are the biggest pitfall. They by far are. And I've lived through it, or you've lived through it, 10 plus years of it, where in the old days, I would sleep with my phone. I'd have 2 phones, and they'd be alerting me all night long about price. Yeah, but yeah, so, that's not a way to live. It's a very stressful way, and so if you are able to kinda put it out of your sight, out of your mind, and allow, people who are of the same mindset using tools that are easy to understand and easy to get your arms around, it's kind of the best of both worlds. You're getting exactly the stewardship and the management and the vision that you have, but you're not having to wake up in the middle of the night and manage that.
When you're the principal of a family office, there's always additional stress and stuff going on. And a lot of people will come into a lot of money and be in that position, right? But you want to have like, and that, the same thing with family office. You have an investment committee, you have a CIO, you have somebody managing your portfolio that you're able to compensate. That's their profession. That's what they do. And for the
Yeah.
average person, they have a career, they have other hobbies, they have families. All of their time can't be consumed with this. They need to be able to position themselves effectively and know that the tools are going to work and execute like they're intended without them having to be emotional in the moment and make a poor decision. Uh,
That's right. Yeah. And well, and being able to remove that emotion actually is going to make you make better decisions. That is the enemy, is what I'm trying to say, is like you do not make good decisions when you're under duress. And part of having somebody that's looking over your finances for you is that they're the ones that are having to incur that stress, not you. And they have the tools to incur the stress. They have the expertise to incur the stress. They have all of those, things that you don't have, nor do you want. Is the guy, heavy is the head that wears the crown type of a deal.
yeah.
Yeah.
Well, this has been fantastic having you on. Is there anything you want to leave people with? We already talked about 2026, but anything else you're excited about?
Yeah, I would leave everybody with, learn as much as you can about the space. I think we have a once in a, several lifetime opportunity in front of us. And I think that, if you find yourself struggling in your career, if you find yourself not passionate about your work, any of those things, I think that that's something that has um, been robbed of us, specifically kind of post industrial revolution. I think, jobs have been siloed, and, understanding money has been now a lost art. Uh, Blockchain teaches you a lot about how money should be. When you see the stark difference, you can't go back. It's as close to the matrix orange pill, blue pill, red pill that actually exists. Like, I don't know anyone that's seen truly behind the curtain of blockchain that hasn't changed their life. That's the bottom line. So if you're struggling, use this as a way in which you can spark some passion. There's so much knowledge and information out there. There's so many people like you, Jake, that are constantly promoting and pushing knowledge that that is hard to find, and kind of voice of reason amongst all the chaos. I don't care if you ever buy a crypto, learn about the crypto, because you will be protecting characteristics of money that deserve protecting. That's a lot of mine. So that's what I will leave you with. We have the power to preserve our own future with code. Mm,
100%. Well, so I've got probably put your show, the links in the show notes here, where people can go find Arch Public and use
yeah.
the software and try it out.
Yep.
I was blown away by what you guys have created, and again,
Thanks.
really excited to partner with y'all. Um, so with that, appreciate you guys joining. We'll see y'all on the next one.